it's mind-blowing, but it actually is probably what is unfolding on it before our eyes. We won't be able to confirm it for another 6 to 12 months from now. I hate sounding like an economist. I'm far from one. I'm a trader.
I have
I'm
terrible news for you.
I'm a trader and a price student, and so I will let the markets tell me if I'm right or wrong, not any economic indicators or anything like that. But we do have to do price study ex post, and we have to look back and see were our theses right about, Bitcoin being a signal.
I actually love this thesis. I've been very vocal that I've actually been using Bitcoin as my leading indicator for the NASDAQ and been trading QQQ puts based on Bitcoin's price movement. So I do love, I think, the thesis. I'm a little maybe lost on how you're drawing that conclusion, though. For myself, I've these are assumptions that I'm just gathering from what I'm seeing. I'm viewing what the price movement of Bitcoin directly related to private money, hedge fund managers, and so on, who do not need to publicly disclose that they're buying or selling Bitcoin. Most don't have to do that. And they have their own beta calculation for Bitcoin and have in turn moved portfolio allocation accordingly. We're seeing a rise up in the Bitcoin price. And in my head, I'm seeing, oh, we are 9 days away from the end of the quarter. Bitcoin's price is going up. If I think that this is just being treated like a risk on asset by fund managers, they probably have an allocation percentage that they're supposed to have for some of their clients. And they're just trying to get to that allocation amount by end of quarter. And then the dump will continue. I'm curious if that is in any way incorporated or you're thinking in a similar fashion that there is some private money being put into the Bitcoin market ecosystem. And that's part of the reason why you're seeing it trade almost in tandem. Chris, if you could pull up that chart where you guys highlight since January 1st, there's been a 90% positive correlation since January 1st, 2017 between Bitcoin and the general markets.
Yes, so I don't I don't really look at calendar effects. I think that it's a little too short term for what I'm trying to look at. So I don't really look at calendar effects. What I'm looking at with this correlation is part of what you're saying is that now a lot of these hedge funds have their allocation and it is a beta play for them. And so they treat Bitcoin and stocks in the same risk sleeve and then have their beta weightings to allocate to each. So, quarterly effects where, stocks go up with Bitcoin at the end of a quarter as they're allocating or that kind of thing. That could be a result of this idea that Bitcoin is, again, it's on this hedge fund stage and has been, um, you know, very obvious for the last several years due to this, 90% correlation that we have. And the big takeaway that we are making at the Bitcoin layer and understanding the correlation and how we should think about it is that Bitcoin is a risk asset for the money players that are affecting the market. We see that due to correlation. So when they're making those moves, they're making them as in tandem with stocks and Bitcoin. But if we look at when Bitcoin does its parabolic thing and doubles, triples in a quarter in this rapid fashion, the correlation to stocks breaks down because something separate is happening in the market during that time. So it what would the takeaway for that be for investors? It would be that Bitcoin is going to be subject to the cycle and global macro risk 90% of the time, but for 10%, it will act on its own fundamentals. And historically, that has been when Bitcoin has gone up in a parabolic fashion, not when it has gone down. When it goes down, the correlation goes to 1 100%. And so Bitcoin exhibits a ton of cyclicality along with other risk assets, except for when it doesn't, which is a very short amount of time. And during that short amount of time, dramatic things happen that we have to point out and explain in order to explain Bitcoin's 100% compound annual growth rate that it's shown since its birth. So it's actually a common sense discovery that we made to try to explain how Bitcoin can go from 1 cent to $50,000, but still be 90% correlated with stocks. It's you have to tie you have there's a missing piece of the puzzle, and we believe that we discovered that, and not even this huge discovery, but more of a common sense way to explain the divergence over the long term time horizon, while also staring the reality straight in the face that Bitcoin and stocks are correlated and Bitcoin is a risk asset. That's what the market tells us.